Yes, it is our view. I think right now we're in a risk off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up.
Although Jerome Powell, the chair of the Federal Reserve, has maintained that inflation is under control and the economy is stable, Cathie Wood holds a completely different opinion. Although underlying signs suggest long-term instability, she contends that the economy is being supported by short-term fiscal stimulus. Wood points out that the U.S. economy is far weaker than it seems, citing falling real wages, sluggish productivity growth, and mounting debt loads. She also cautions that old economic models are becoming outdated due to the rapid acceleration of disruptive innovation, which policymakers are unable to keep up with. Wood thinks we're on the verge of a paradigm shift in the economy that might change markets as deflationary forces from technology collide with inflationary fiscal policies. Take a moment to like this video, subscribe to the channel, and turn on notifications for more content on Bitcoin and the digital asset space. Also, drop your thoughts in the comments below. It helps with the YouTube algorithm and supports the channel. Thanks, and enjoy the video.
Well, we tend not to be very short-term in our focus, but if we're right and inflation is going to surprise on the low side of expectations, we wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down, even egg prices have started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation, good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3 cuts. So one of the things we think is going on right now is, and Treasury Secretary Bessent today said he does not believe that we're going into a recession. We think we've been in a rolling recession and that we are actually going to see some negative quarters here. And that's because the velocity of money is collapsing as people, the labor force is worried that, and we're talking about federal, state, and local, quasi-government categories like education and healthcare. There's a lot of fear around job security right now. So we see the saving rate going up. We see the velocity of money coming down. And we do think we'll see 1 or 2 negative quarters. What we believe that will do is set this administration up and the Fed up with more degrees of freedom for tax cuts and perhaps lower interest rates, or at least ending quantitative tightening. Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If we look at our on-chain analytics, what we see is, I'm sorry, I have to get this off. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up. I think the Trump family is very supportive of crypto, which is great. It's completely different from the environment we had been in. Our view on meme coins, we're not as focused on them. We would not be putting them into our various private funds because, and I think that the combination of AI and blockchain technology is creating millions of these meme coins. We think most of them are not going to be worth very much. We think there are just going to be a few crypto assets that will gain most of the spoils in the entire ecosystem. Well, I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins. The millions of meme coins will probably end up worthless. So when we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying. And we think they're going to become very important in the years ahead. Meme coins, not so. It's interesting. The meme coins will be collector's items. So digital collector's items. And so, of course, some will withstand will withstand the judgment of time, and that may be one of them. But our working assumption is that when you're talking about millions of meme coins, that that's just a step too far, and that most of them are not going to be worth very much.
According to Cathie Wood, digital wallets will play a significant role in the financial industry going forward. She predicts that most people will only use a few big wallets, likening them to credit cards. She claims that Coinbase and Robinhood are two formidable competitors. Coinbase is the leader in cryptocurrency adoption, whereas Robinhood is notable for its user-friendly interface. She also draws attention to the expanding tokenization trend, pointing out that Larry Fink, the CEO of BlackRock, has expressed interest in tokenizing financial assets, which has the potential to transform the financial sector. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
I think what is happening with the stablecoin movement, which again, we're going to see deregulation and legislation this year, we think, which will open the doors to stable coins. So USDC, that's Circles, USDT, that's Tethers. That's the on-ramp into DeFi, decentralized financial services. So you're already seeing lending and saving and yield harvesting taking place on these ecosystems, which are supported by Ethereum and Solana. And of course, you're seeing wrapped Bitcoin on Ethereum as well. So Bitcoin's trying to get into the game. But in terms of real utility, if you go to emerging markets, and I know this is not this market, but you go to emerging markets where their currencies destroy purchasing power and wealth with massive devaluation. So it's really their policy leaders. They are using Bitcoin in particular, but also stable coins, which is effectively the dollar, as backstops to their purchasing power and wealth, because they've been through too many of these devaluations. So I think the real utility, if you're looking at stable coins and Bitcoin today, is in the emerging markets, really protecting consumers' purchasing power and wealth. Well, our main thesis for both is We're looking for the winners in the digital wallet space. Most of us are not going to have many wallets. You can think about this in the same way you think about credit cards. Most of us don't have very many credit cards. So we're looking for those winners. And, Robinhood and Coinbase are coming at this from different angles. Of course, Coinbase from the crypto first angle, and Robinhood from more the equity end of the spectrum. Both of them have to, Robinhood has nailed the user interface. I think Coinbase is putting a lot of effort into getting that right as well. So we're looking at them as two of the bigger winners. In terms of our own venture fund, and we did start an interval fund, which is a 40 Act fund. I mean, we could see tokenizing that, putting it on chain, and enabling many, many more people to get involved with the private world. And I think other venture capital firms could do much of the same thing. I do agree there's going to be a lot more competition, a lot more ways to fund new companies. So that is true as well. So I'd say this new world's going to be complicated. When we hear Larry Fink of BlackRock saying he wants to tokenize everything, it's big, because it takes a lot to move the needle at BlackRock. So we're watching the tokenization movement very closely for our own purposes as well. We have been known for our Tesla call and our Bitcoin call, and those still stand as two of our biggest calls, for sure. I would add, in the AI age, platform as a service companies like Palantir, which are really enabling large enterprises to move into this AI age and enjoy the efficiencies, the cost effectiveness, and to create new products and services. Those, I think, are going to be very big as well.
According to Cathie Wood, just a small percentage of meme coins will endure over time and eventually turn into digital collectibles. Given the enormous volume of meme coins in circulation, it is unlikely that the majority will have any lasting importance, even though some might. Wood believes that the stablecoin movement is a much more significant advancement in digital money. She believes that stablecoins like USDC and USDT will gain legitimacy through legislative and regulatory improvements, opening the door for wider use. In decentralized finance, where lending, saving, and yield farming are already flourishing on blockchain networks like Ethereum and Solana, these stablecoins are essential entry points. Wood also emphasizes how Bitcoin and stablecoins offer genuine benefits in developing economies. People are using digital assets to protect their wealth and purchasing power in areas where local currencies are severely depreciating. Bitcoin serves as a decentralized inflation hedge, while stablecoins, which are essentially digital dollars, provide stability. Because of their user-friendly interfaces and crypto-first strategies, she thinks that businesses like Coinbase and Robinhood will become important participants in the very competitive digital wallet market. Wood is also keeping a close eye on the tokenization movement, which has accelerated with support from powerful individuals like Larry Fink of BlackRock. In her ideal world, venture capital funds and other conventional financial instruments might be tokenized to increase their accessibility for a wider spectrum of investors. And as always, happy investing.